Yo, what's up? Stengel here with John. Ready to do a weekly recap. Week ending. See, I don't remember what Friday's date was. The 27th
Yes,
of
sir.
January. And we just want to go over the things. It did exactly what we thought. The market direction was exactly how we called it. And we'll get into the charts. And John's just going to do a brief recap and what we expect for the upcoming week. So, all right, John, take it away.
All right. Okay, we're gonna start with the daily, just to start our perspective where we're at still. Um, as you see, we actually dropped off coming into the Monday. Actually, this is the Monday right here. Monday was this week was the 23rd. So this is the 23rd right here. It was a continuation to sweep these highs. Once we swept these highs, going into Tuesday, we swept half back, and then Wednesday, we literally swept below that candle right there. Going into Wednesday, we swept this candle. The fact that we didn't sell off from here, knowing that we still had places they wanted to take this market into, and into earnings, they moved it higher. So coming into Thursday, we made a new high, but we didn't really touch this 83, which is our kind of our area. It's kind of our area that we wanted to be in, coming into the Fed and the 30th. On Friday, we kind of wicked down, but we did not go to halfback of this candle. Actually, we did go halfback of this candle. Sorry. Um, oh no, we didn't go to halfback of this candle, the daily candle. We went halfback of a 4 hour candle. So we still got areas that we could pull back to, which will literally match up with where we think the market is going to head into Monday, going into Tuesday, and the Fed meeting on Wednesday. Um, we still have big tech earnings this week. One of the biggest companies are reporting this week, I think Google and some other ones are reporting. We really don't care about companies that report, but we're mindful of it. We don't trade stocks, we trade the overall market. But saying as it's going into earnings season and this trend is up, we're still looking for upward movement into the Feds. Even when the Feds talk, that's a day that we're going to stay away from or be mindful of it. We can still trade it. We're going to trade with less contracts, less risk. We're not going to trade into the report. We're going to wait until after the report is done and see what it does. Um, Usually they like running it up, so maybe a possibility of running into the 41 or 4200 into Wednesday could be a possibility. Maybe a pullback on Monday, going a halfback of this candle right here around 40.50, which I think we had that as if it broke down 58, we could have gone lower and probably swept this low right here. But they decided to send it up. Let's go down to the lower time frame on the 4 hour and see exactly what happened. Um, let's break it down for Monday. Monday, we literally held these highs. We swept the high. Swept the lows, swept the high, swept the high, swept the lows. Then we swept into the 5 a.m. candle. Coming into New York, New York literally sent it all the way up and then started selling it down. From Monday into Tuesday, sold it down to sweep the same price that they got. They swept all these highs. In fact, this is literally what we expect into the same play that they're possibly doing right now. The reason we say that is because look where it closed on the 4 hour. So we're probably going to get a pullback into this area right here and then possibly go. This is literally the same setup they did up here. See, as they broke out, same thing. Came here, broke out, failed the high of this 4 hour. So we could have a little bit of this Monday coming into halfback, failing the highs, and then rolling into Wednesday or Tuesday. It could come fast to sweep these lows right here and possibly hold the halfback of this candle right here. This will be a deciding factor. We don't hold that halfback. We're looking to get back down here to this area right here. This will be key going into this report, which will be this halfback of this candle. So The issue is that we held 58 here. Right here, we don't hold. We're looking for a move down here because then it's gonna literally pop up, fail half back, and then come down here into the report. Now it could literally continue to move up, but as you see it, they keep buying. Right here, big candle going into Monday. They bought the low again of Monday, swept it, ran it up. And Wednesday, they didn't test this half back. They just kept going up. Right here, they swept this 5 a.m. candle, New York. This was supposed to be a sell day back down here. They keep pushing it up, pushing it up. So they're pushing it up for something. It's more likely for that Fed meeting. So we can't be completely biased of this continue moving up. What we do expect is a pullback at least to this candle right here, and then this will be the deciding factor. Remember, swept the high, hold half back, we're going up. Swept the high, fail half back, we're sweeping down here. We fail down here. That's the 58 we fail. The range will go down. We'll probably end up at this area right here by end of the week. So let's mark this. So when we go back to it, you're gonna see it. As you see, this is MES. So I really don't move anything on this chart. So I could go back to it. I don't like my charts being completely covered with stuff. And this is on a macro level. On a micro level, you're gonna see opportunities to get in this long and short. And remember, the best thing to do is set up for your week, set up for your day, set up. We keep repeating that. If you set up, you're gonna know where prices are going. See right now, boom. This, right? Now we're gonna go from a 4-hour to a 30-minute, and we're gonna see what happens. And this will be sweeping this high right here, coming down here. But this could be their saving into the Feds. So they could send this up into Wednesday, sell it off into the Feds meeting, and then come down here and bounce here because they want to trap the shorts and then run it back up. It's still earnings, and it all depends on what the Feds are going to do. I think they're still running it up. I think they're going to make a head and shoulders type pattern here. I think we're going to go higher than what is expected. And the fact that we breached this 40, 80, 83 area, which I showed you on the daily, since we breached that 40, 83 area, kind of, if we hold for next week here, if we close above this high, like I say on a lower time frame, you want to see a close above here. We close on Monday above here, you better believe we're going up here. If we wick down to this 4-hour bounce and we close up here on Monday, they're going to run into Wednesday up here, and that's going to be key. If not, if we close below there on Monday, we're going all the way down here, possibly into the Fed meeting. Let's go back to the 30-minute, see what's going on here. This candle, I said, what does this candle mean to me? Absolutely nothing. This candle means nothing. It's a Friday candle, profit taking. What it could possibly do is come down here, sweep, and come back up and take everything out. So let's drop down 50 minutes, set up for the week or for Monday into Sunday. And let's see where the market takes us. Another thing that was key this week was all the gaps were filled. Wherever price was at the close, they took it there. It was indicating that we were gonna make higher highs. On Friday, we were underneath the close, underneath the box, and they flipped it around. So yes, they still do want price higher.
I think we still have a gap up on top to fill.
So I kind of looked at it. We really don't have that much of a gap. Now, if you do have a price gap from the sell-off, if you go back to the daily, I want to show you something.
Yeah, it's just I don't know if it gets back up there, but yeah, right there's a nice price gap.
Right here, there's gaps and there's price gaps. This sell-off like this is usually what we call a price gap. That has to come back here and trade into this area. Liquidity moved too fast to the downside, and that's what it caused it to keep on going down. But the fact that we have this big candle means there's a return.
That's the one that I'm talking about right there. Yeah.
This one or this one?
No, that one. No, the one that is on the big candle around the 4100.
Yeah.
Yeah.
So this candle right here, we literally got to the highs of this candle. It was 41.40. Oh no, we didn't get to the highs. We got the half back of this candle and rejected. I forgot to display that on this chart. I did erase it. I think I was doing something on it. So if you literally take this candle and look where, I think we're above this price right now, but I'm going to put it on a 4 hour. I think it's on a 4 hour that you'll see what happened on Friday. And we're still, I mean, if you could literally see it, we're still on an upward trend. Let's see where we got on Friday with this half back of that candle. See, we closed above it. So closing above that half back of that candle literally means that we could literally come up here and sweep this high. This is the area that's pretty interesting, and it's possibly once we get to that high, I mean, you're literally looking at, and this is where I was looking at right here. This 4 hour candle is the candle we're trading in, and we did hit the half back of that candle because this sell-off was very drastically, and I think this sell-off was into the Feds as well. What day is it? Yeah, this possibly into the Feds talking or something. Because so let's look at where it laid at. Oh no, we got right to price of this. And that lays at 95. Let's make sure that's right. Oh, you're a man.
Good old number 96, man. 24.55.96.
Yep. There's one right there. Now look how interesting it gets down here where we're at. And where we're possibly thinking the market is going to pull back to. So let's go back to the area where we're at. All right. We're right here, failing that half back, right? So we swept the high of that candle. This down here, this price right here is the low of that. Is literally the low of that 4 hour candle, right? Well, it matches up perfectly. So we swept, failed. Can we pull back to 40? Yeah, we can pull back to 40. This area right here is bottom of the daily and bottom of that candle right there. So this area is going to be probably key right here. Now, can we possibly get a pullback? Like I said, we failed. Maybe come down, come back up, sweep, fail, all right? Pop up a little bit, come down here. This will be our buy area. And it matches up with this kind of scenario. I don't think we go to 74, but this was possibly what's going to happen right here. How it's looking to play out for this week. This area of 40.40 to 40.16. And the reason I say that as well is because you remember the big run up. Remember we failed here 12 and we ran right past everything. Like we literally just went to the highs. We came back up, but we never really tested this halfback on the way up. You see, this halfback right here, literally rejected, swept, and we just kept running up. We didn't have a regular structure where this should have popped up a little bit, should have wicked here, and should have took off like that. All they did was just keep on running up into the close. And now the fact that we're at those highs is looking like we'll possibly return back to that area right there coming into this week. Now, it could possibly be into Monday. We still need to get under here, this halfback of this candle right here, which is the 58, which we were talking about it failing on Friday, and they ran it up. So we fell 58, which is this halfback, sweep this candle, we can't get back above, and we're looking at a bounce, sweep this high, fail, and then come down here. That's about it right there, Dobbs. I think that's covered everything. If anyone needed more than what we have, like that's generally what we see the market doing right now. Into the Feds go with what the market wants, and they reduce the interest rates that they're going to hike. This thing's gonna shoot up. It's gonna shoot up like a rocket. Regardless, I think even if they don't, it's gonna shoot up because they want to make. They're setting up to make the most amount of money out of the market, and the only way that they have been doing that is to take it higher. If the Feds actually lower the interest rate, it's a possibility it's going to sell off even harder, because they're doing what the market wants. But if the Feds continue to raise, they're gonna continue to raise this price. Remember last meeting they were like, oh, we don't want the price where it's at right now, which was 4,100. We're coming right into the week of the meeting. So be mindful that we react to what's going on, not react to candles. Candle drops like Friday doesn't mean anything. Doesn't mean sell down here. It means wait for the play to set up, and I tell you that constantly. So what could possibly happen? We could possibly get let's go on a 30-minute. We could get sweep. If we don't get above this price or close above this price, and we aren't going to halfback, they're going to keep on selling it. Breaks down below the lows on the 4-hour, you're going to keep on seeing it. It'll start going, keep on going on down direction. Do not try to buy it thinking that we're going back up to the highs. Wait for the play to develop. Wait for it to tell you that it's doing it. And I showed you on the way up. The way down is absolutely the same, but it's literally you have to wait for it to set up. And I told you on Friday, wait, like the play, I thought it was going to come down, fail 72, and into London's close, we were going to go down. As soon as it did this London's close above 72 and 74, I was like, this isn't a short anymore. This is a long. This was the long. And I walked you guys through the long on this area right here. The long was perfect. I think here, this was the long right here going into 2 o'clock right here. I said, this is a long. This is the close, held half back, boom, took off right here. Nice entry right here. And I walked you guys through it for a 10-point move right here. Was there more after that? No, this drop is unpredictable. We did hit our range that we talked about, and that was it. After this time, look at the time that it is. It's 3 o'clock. You're not taking the play there. You're not going to have a play set up. You're not going to have a high, low, sweep, nothing. You just literally just have this move down, which is profit taking. If you're shorting this on the way down, it's a scalp play. Better have a risk that you're comfortable losing, because this could literally wick down and wick back up and take you to 4,200. But you have to have a risk that you're comfortable losing with and a goal that you're getting. All right, Dob, so let's do, just give me anything there.
I mean, that's pretty much it. The only thing I could say is on Friday, Stangham line. If you had Stangham line, it was perfect on London close. They wicked. He got above Stangham line, wicked to the line, and I mean, your Stangham line is going to keep you on direction with clocks. So you got to keep mindful of clock and Stangham line. So anything above is long, anything below it is a sell. So
yeah, and what we teach. So what I told you about, like, wait for it.
It's a crutch. It's a crutch. If you don't understand the high-low halfbacks or the low-high halfbacks, it's a crutch. It will keep you on the right side of the trade. So you definitely, if price is above Stangham line, you do not short it, because you're gonna get burnt.
No, you wait for the setup. You wait for what we tell you, and then when the line sets up, that's when you want to take. You know what I mean? You got to put all the check marks together. Are we above Stangham line? Did we do halfback high? Let's do that real quick right here. We had it right there. Okay. Well, here's a longer time frame, but let's go on a 15-minute and see. And you could use, right here, you're not looking for shorts. So it's already off back. It's telling you don't look for shorts. Don't look for shorts right here. We're going into London's close. What are we looking for? Longs, right? So is there a setup for a long? This is a 15-minute, right? Let's see, is there a setup? We did a high right here. We did a low, right? And we're above this candle. You got to break it down into areas. And it gives you time. The market is not going to change direction. I mean, this was profit taking. You got to be a little bit mindful of coming into price. And this was just a move that was outrageously fast. Like, this happened really, really fast. But even at that, if you reacted to this, you probably got this you know, after Stingham line, this up here was a nice play. And this gives you more than 10 points. Um, will this be a continuation play? I don't think so because of the fact that we had so much things up there that we had that we're cautious of buying the high. So in order to get into this play again after this, and you see us drop below this high right here, you literally have to come back down, and it's not showing you along right here. I mean, right here, you're waiting for it to see if you get a break above the highs. It should have consolidated here like it did here because of the move. You know, we're going from red to green. We were red on the day. We went green at 74. Right here, we went red. We went green on 74. Came back under. Maybe you want to consolidate at these highs and then take off for the move. And that's literally what they did was base the trap to try to get people. That's why I said now you gotta wait for London's close because what they did was take it to the gap in the box, rejected the box, and then trapped you here. And the fact that you see those dojis like that, I mean, right there, it's telling you long. Maybe after this, you know, you're looking at London's close. We're not breaking the lows.
Nope. You
We're
see
not.
all the wicks. They're buying. They're
Yeah.
buying. They're buying. Buying.
And if you're not comfortable with this, after the play goes up and pulls back, and it isn't going down lower, 58 would have been your okay. We're going lower. 58, we're going to sweep. That's where key would be at if we fail 58. But the fact that we're above it, now you gotta wait for London's close. Wait for London's close. This is London's close right here. These two candles. If we have a half back test, not really. But let's go on 30 minutes to see this.
No, but it held it. But it did hold.
Yeah. And that's possibly a reason we're returning back here because we didn't do a half back test of London's range. But it held. So the fact that we're above that high, I just waited, and sometimes it's like that. Look where we came back to. So we did come back to London's close.
Yep, we're sitting at halfback.
We're at halfback. So when I see this, I don't see anything but a candle that just they took profit. And all they did was run it up. Why did they run it up? We got above 74. So we're green on the day. Every market is green. I'm not talking about NASDAQ, not talking about the Dow, I'm talking about Asia if they were in it, London if they were in it. Everybody is up right now.
Yep.
You're not turning the market. You're not turning the market. You need to find yourself in a position to go long. Wait.
Above Stingham line. I think right here is a key level, John. Just right here, we need to hold this level on these two candles.
What it started doing at the highs, it started teetering. So say that you're looking at the 30-minute. This is what I'm looking at. We're holding the high. We're holding the high. We're holding the high. So what am I looking for? It's at resistance. We're looking for a move up.
You're looking for an entry pullback. Right there it is.
And I called it when this was doing it. I said, we're about breakout. Why? Because look at the 15-minute. We're at these highs, teetering. We're not below this high, right? Why am I selling? When everybody's buying, let's see what happens. Look, we needed to stay above it. Stood above it. Then we started doing this. Look what they started doing here. You go on the 15-minute. What do? We swept this high, swept this low. Now we're coming up. So these are 30-minute candles. This is one 30-minute candle, two 30-minute candles, three 30-minute candles. Right here, if we would have failed this low, we would have gone down here and maybe made our range to the downside. We didn't do that. Held this half back right here. And then this is a key play right here to get in. Boom. Another entry. Boom. Now, these two entries, you had time. And I said 91 was probably the worst price you could get. And it was up here near the high of this candle. And I said, we're breaking out. And if you on the 30-minute, you see. And you got to be mindful of your eyes to start thinking of longer time frames. 30-minute right there. Look, worst price ever, 91.50. Well, around the worst price you could have got. But you could have got, 98. You had a lot of time to get this pricing. You had a lot of time to get this. And this is literally 10 points and more. It gave you 18 points. 91 to 08 was 9 and 8. 17 points, and all you're looking for is 5 points, and then 2 contracts, and then 3 contracts, and 4 contracts. Was there a play down here possibly? I wasn't keen on taking this long down here until London's closed. Sometimes you can have the one play up, this downward movement. If it broke down here, then you will get a continuation play. But the fact that they kept running it up, you wait for London's close, and then you wait for an entry. That's key. Wait. I say it all the time. Wait and set up. Set up.
Yeah, I think the key was this candle right here. Once that held, once this price
Yeah.
held right here,
And
your go time. So
and once you
but I
got
think,
above 70,
but I think you need to be in the play here. I mean, you start buying the highs up here, you can get iffy because they could have done this candle right here. They could have dumped it right here. You see what I'm saying? So the to be in, you want to be in right at London close. You got to pull the trigger at London close.
yeah. Or you wait for entries. You know, you're not sure if this holding.
Well, I just said if this low of this candle holds, look, we swept it. What do we do? That's the check. We swept it, we held it,
and we're above the highs right here too. So once we got above this high right here, you're looking at we're above the close of Friday. I mean, Thursday, 74, and it's moving upward. Price is moving upward. Now this is a bigger time frame. So the thing with the bigger time frames is that you're going to see direction a little bit more clear. Now, you know, you could drop to a small time frame, but the thing with a small time frame is that once it gets to its highs, and if it were to pull back this way, it will move extremely fast.
Yep. And you could have waited the half back of this drop candle right here. You could have waited and got in right here.
Got above, because that's literally high, low, sweep right there. High, low, swept right here. You swept up here. That's the high, low, sweep right there. So that's literally key right there. You could have gone into and what you want to do is it has to be a green candle. You know, you don't want to get a high, low, sweep, and then this is a red candle. You know, that wouldn't make any sense. You see how this is high, right? Swept the low, and this is a green candle. And look, the entry's right there. Same setup. High, right? Came down, failed it. We swept, came up, high, and there's a green candle. So that's saying they're buying. High right here, swept, came back up, green candle, go. And it literally came back to half back of that candle right there. Same setup as right here. Same thing that Dobbs teaches all day on a small time frame as well. That's literally what we're looking for on every time frame. It's just when it gets smaller, you're looking for a smaller targets, or you know, you're going to try to get to.
Yes, it's smaller targets. The targets aren't as far when you go.
They aren't as far, but they're doable. They're very doable.
They're doable.
Yeah, like if you see a big candle sweeping.
But you better take targets because it will go against you.
Like this is literally
a smaller time frame.
This is literally where it is. Look, boom. Right here. When it came down, this literally isn't telling you to sell, because this, you know, 50 minutes, this candle should have been upside down. Then it's telling you to sell. Then we possibly get a big sell-off. But the fact that they took profit up here at the highs when we broke this range right here, and then they literally brought it down, you're looking for a play upward. So once we got above this halfback right here, you know, you could be cautious above that halfback. This is the entry right there on a higher time frame. You saw it perfectly. This is on a 15-minute. Now you drop down to a 5-minute, you're gonna start seeing it on a 5-minute. But like I said, you got to be key with your eyes. So look for the big candles. Big candle down, boom. Are we below it? All right, right here, we can't get above, Look, another candle, right? What are we? We're holding the low of that candle. Now what we're doing, look like we're almost failing half back on this candle. What do we do on this candle though? We went above half back, and look, now we're above this high. So if you're above this high, what are you aiming for? First target is up here. Boom, take out that high. What are we gonna look for? This low down here. We hold that low, where are we going? Boom, that high. Takes out that high. So start looking at candle formation. This is on a 5-minute. If you drop to a lower 2-minute, you're gonna have less targets. And the thing is that if you took, like say that you saw this and we held half back of that candle and we're above that high now, because we're breaking highs. Look, boom. Remember I say we need to close above these highs. closed above this high. What are you looking for? This high then. If you
So
were
where
to
was the
jump,
turn? Because, you know, a lot of people don't understand where the turn is. Right here is the turn off of
and
this candle, because that halfback right there held
and
that candle.
and you can wait. You don't have to take it on that candle. Look, wait for a Stingham line up. Take a risk here.
Yep.
Stingham line, we out. We break this, we out. Because we're gonna break this low.
Yep.
We break this low Stingham line, we are out. First target, boom. Get in here, 73, boom, 79. And look, it literally just shoots above it. Where are we above? This low. Where are we going? This high. Boom. Keep on riding it. Where we possibly going? This high. They pulled back a little, but what did we not do? There was a lot of things up here until London's closed. So if you look at it, we feel this low, we're getting out of this because then it's going to go half back and then sweep the low. Once it held above this high right here, boom, look what's it doing. Held half back. This is literally this dip down here. Holding half back, dip down, held half back, boom, let's go. Take out that high. Same thing here. Held this half back, boom. Where are we going? Take out that high. It's small time frames, but the thing is that's why we say don't jump on the small time frame. Do 15 to 30 minutes. Start running the trend on what we teach, the high, low, half back, level, go. This is gonna change. This is an upward move. It's gonna change. So it's very important that you see this because when it goes down, it's gonna go fast. They're gonna go to levels that regularly hold and they're not gonna hold. So you have to be mindful of that. And they are going to trick you. They are going to do a trap. They're going to pull up and then roll it over. Once that happens, we will be there to guide you along with it. But it's going to be faster than the way up. The way up is easy. The way down, people can't trade it. I'll tell you that right now. A lot of people can't trade it. But we'll get you there. And like we said, start with one contract, one mini. Work your way up to 2, 3, 4, 5. These prop firms give you up to 12. Some give you up to what 96 minis. I don't know how many minis. The point is that you're gonna see when the play. We're gonna set you up to see how the play goes and the direction it goes. Your whole thing is working on entries and getting to targets. And as soon as you get a target, you start seeing where we're going. And now let's go into the London close range and stuff.
Before you move, hang on. Go back to the charts. I just want to show them real quick. This is a sample of the turn to the bottom side. Right here's halfback.
That's fast.
That's fast though. But that
really
is
fast.
Yes, it's hard to get in that play because they dumped it so quick because they're profit taking. That's all they're doing is profit
and
taking.
What they don't want to do is cause a panic. So they dump it that fast in order for people not to start selling it. Because once it gets so low and they base it, nobody's going to sell it until it develops as a sell. Understand that if it doesn't develop as a sell, nobody's going to sell it. So when I tell you that, what does that candle mean to me? Absolutely nothing. Why? Because there's got to be a setup there.
Right. But I'm just showing this is what the turn will look like. This is what it looks like.
Yes.
To the downside.
It's going to be on a higher time frame. And right
it's going to come down like this, come back up here. It's going to come on down here, come back here.
And you're gonna don't anticipate, like we're underneath Stingham line and we're above it right now. You have to be mindful of that. Don't anticipate that we're gonna break Stingham line, take to the highs, because it's not gonna happen. The Stingham line will keep you in a play, like Dob said. It'll keep you in a play, but do not anticipate that, oh, once we get above Stingham line, it's gonna go to the highs. No, it's not. It's going to continue to sell off to the downside. And that's what they want you to think, that it's going to flip around and go up back to the highs instantly. It's not going to do that. They're going to keep on selling. They're going to make you think it's doing that. And then they're going to flip it around. But that's why it's important to look at the bigger time frames. Because on a small time frame, you're going to see price is going to dump, right? Price is going to dump. It's going to pull up on a small time frame. And then it's gonna like this instantly. Once it gets you above that Stingham line, you're gonna think, oh yeah, we're going higher. And then once you go on a higher time frame, you're gonna see that all we did was do high, low, 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 high, failed halfback. And Stingham line said short, and then on a higher time frame, all this movement above Stingham line is gonna be just wicks. just like these, just like these. So if I go on a higher time frame, that's all that is. Is that a sell? Just wicks.
Yep, and it'll be the opposite. So from the bottom side, it'll come up and just wick into Stingham line,
Yeah.
and then it will roll over.
That's why we kind of say don't stay away from stay away from those shorter time frames, do the minis, right? And then ride these plays to the London close range.
It's also very important to go back on your charts, guys. Go back 10, 15, 20 days. Go back and do what we're showing you to do here. It's the same technique. Once you start training your eyes, you're going to be able to see it better.
Yeah. Direction, we'll have you with direction. So let's do London's close range to set up to see where we're going, just for everybody to get comfortable. All right, so let me get into the box, and then we'll start seeing what could possibly happen. Okay, so we got this candle way up there. Now look at that's big doji, big old doji. Okay. Yeah. All right. Now we are a halfback of London's close. All right. Let's do our boxes. Now I do the fibs on it just so I can put the boxes. I don't like having the fibs because I say I have too much things on my chart. It's going to confuse me. And it gets me mad because I'll say, what is it that I?
But look how it matches up to your higher time frame, though. See how those lines kind of line up to this line, this line. That's your higher time frame. Look, this line.
Yep, and that's what I told you. You know, it's mindful of where they're going to buy. It's probably down here. This is the low of the daily. This is the halfback area right here that we just rejected. So be mindful of that. You got the high over here. So say we're already down here. I mean, look how that box sets up. We're on the London's close range, but we're back to halfback of London's close. So indication we feel that's 76. To me, you know, a lot of things are going on there. Another fact is, now let's go to the higher time frame, right? Understand this on a higher time frame. Where are we at? Look where that box sets up at. Fail here, come here. This is definitely going to be a buy zone right here. Can we possibly come down here to this low, or just fail it? We could fail here. This is 43, come down to 15, and they buy it back up. Why? Because of this halfback. Let's do another box and see where it adds up. Boom. Let's do another box, see where it adds up. We're on our first box. Let's see how it looks on a 30 minute right here. Just want to put it as big as possible. We're already below this box as halfback. Come down here, I'll be down here, come up, fill here, come here, and we get here. So this area right here is really the area we're kind of keen on. Can they run this up? Yes, they can run this up. But that's why we do the ranges. Where does it put us? Let's do London's close range right here.
Because if it holds the low, then we know it's going. If it holds the low, halfback, and then the high, it's going.
Come here, pop above here, we're going up to the high side. Sweep here. Can we do that into Monday? Possibly sweep this high and then fail. But let's look at a bigger time frame. What do we do? Why are we below this high? Where's halfback? So can we possibly come down here and go above there? Yes. But can we come down here, sweep, fail, and just keep going? Yes. That's possible. Can we go back to the line right here? Pop back up? Yeah, you could do that too. It all depends on if we hold this half back. 58, I think, is going to go like butter. One thing that we did notice on, like I said, this is New York right here. That's New York, and they were selling. The fact that they bought after London's close, it means that there was a big fight, and right there, that's going to be the science factor. Right here, they've done this before, where it gets to boom, because we get to this high again from this candle's high. Take this, let's take the whole body of this candle. You want to see something? You didn't break out the high, did we? Nope. Let's do the body of it. See where it went. We didn't break out the high, did we? So possibility, look where everything lines up. We fail there. Where are we gonna go back to? That 12. That literally the 12, or well, it's 22 right here. The 12 is down here, I think. Well, it's gonna be around this area. It's gonna be around this area. It's gonna be a buy. It is 12. I'm sorry. My eyes are deceiving. So the fact that we couldn't break out, right, from this candle literally means that we could possibly come back down into this. But it's keen that we feel right here where we're at. Like I said, wick down here to this half back, hold, and pop above, it's gone. But that 4 hour is the only thing that's holding it down. Pop here, reject here. That means that we held half back. We should be making a new high. We're not making a new high until Monday and Tuesday, and we get below this 82 again, or 83. Yeah, you better believe that this thing's gonna come down to the bottom side, and this literally sets up for this play down here to once again my eyes 12-ish area. And if it gets down here, remember we gotta be mindful to see this, and we already high, low, didn't hold half back, didn't come back to half back. So this is a key spot right here to look at. And then I think I already had looked at this for the week. I had told Dobbs about it. And that's probably where we'll head. Now there is a possibility that they run into the Fed meeting and it goes higher into earnings. They just keep on ripping it, but it's going to be on this half back or once we break this high. And they could literally send it up. We've seen them do it and then sell it right back down here. So they could just do a massive blow off top, which they're literally setting up for that as well. Yeah, they're literally signing up for that massive blow up top.
If they do run it up, that's their safety net. That's how they hold the market up. So you look at it as a safety net.
Because that's where, they're running it up so they can sell the high. So that's literally why they run it up. They run it up in order for them to sell it, no matter what goes on. Now, if it comes to a period where I think it's a March, we could have a big sell-off. And how this sets up, I think they continue to run it up. So you got to be careful with this sell-off, and then literally look what they're doing right here. This sell-off into here. But look, you got a Wednesday coming into Wednesday, sold it off, and it's literally almost the same scenario as they did over here, kind of. You see this candle right here, and then the formation, how we ran up like this, how we started sweeping highs, sweeping lows. All we did was come back to that half back right there. So right here, we were supposed to pull back. What they kept doing was running it up. Yeah, even those candles, that's the same setup they've been doing. See, look, right there. And then held that half back up here and then ran it up. So the possibility of this happening right here is very keen. Look, same candles. Like maybe we fold back down, hold half back, but we're at the highs looking to break out. So it's not necessarily saying that we're gonna come down, but be mindful of it. Once we break below, it's gonna go like that. But look, boom, when we end up coming back to this half back right here. So
Hey,
and
y'all
we're
seen me draw it before John even put the fibs on it. I already showed you this was happening right here.
and the fact that this is still uptrending is very dangerous. Remember, we're in earnings season, and it's the biggest ones reporting right now, so they could continue to move it up. And look, they just kept grinding up, and then they had a sell-off day right here, which literally this sell-off day, I mean, that doesn't even match up with anything. They just keep on grinding up. They just keep on holding these highs. Possibly this high right here, like boom, right there. Kept holding the highs, and we're still in that, oh boy, we're still in that face of that zone. And they keep on running up. See, like right here, this is a perfect idea of what they did right here. See how we didn't get above? We could literally be at these highs right here until they sell it off. And then where they're going to sell it? Literally down here to this halfback. So they have the same setup going on over here. They got the same setup. That boom, boom, and then they ran it up. Take that candle. It's still at the high, so it's still breaking out from that candle. Still in a breakout mode. Until we get below here, they're going to continue running up. So do not think this is a short yet. Take the body of it. Man, held the highs and kept going. There's a 4-hour candle from the previous day. So they're all in line with keep on running up. Take this candle. We fail this halfback, then we're going a halfback to the downside. Let's see where that lays at. Right here. So can we have this move down here? Yes. If we fail this halfback. And then we pop back up and then possibly come down. It's gonna look different than what it usually does. So be mindful of that. We could literally Monday come down to that low, which I think we get down to this low. I think we literally come in 12, but the scenarios there. Then that's why we have the London close range. Keep you in place, and look how it sets up. Look how it literally sets up off them candles. This is a 4-hour candle, and look how all the range is set up. The high is here. Look at the low right here at the low of that candle. Look at the low here, right here. If we are below here, then we're going a halfback. And if we fail this halfback, then we're going down here. And this will indicate that there's a complete sell-off possibly. So do not be trying to take this long here saying that, oh, it's going to bounce it. It could literally just keep on going because we'll be below that 4-hour. It'll be breaking out, literally. It'll be breaking out. Can we wick down and come back up? Yes. But for it to do it, for it to be a long, it has to hold this, come back up here and trade back upward. If it doesn't, this thing's going to keep going. But it could go to the upside going into the Fed meeting. Anyway, that's about it, Dobbs, right there. We covered just about everything that happened in the market, what we're looking for, entries, plays, what they've been doing. The gap is to the top side. Oh, the gap, we're actually at the price. We didn't gap or anything. We're literally at price. And that's better that we're at price, because then A's is going to set the direction, and then we're going to go with direction into midnight. And then midnight, it'll settle for another direction. If you guys need entries on, we're going to start everything about, one-on-ones. If everybody needs entries on plays, on time frames, on 4-hour candles, all that we kind of covered the top. We're about moving to the tier system in the coming 2 weeks, I think. And the higher tier, I think, will be more exposed to all that, the ranges as that, the closing ranges, where we expect the market to be at and where we expect the market to go completely. That's about it, Dobbs.
Yep, that's a wrap. So far, market's done exactly what we've said. What's our edge in a room? Knowing where price is headed. It may not hit target, but it's all about direction.
Well, it hit every target on. It hit every. So every target on this close range hit.
Yep.
94 was the last target up there, and that's another reason that there was no point. Actually, not 94. The high target was 09 was the high target on the range. I'll show you right now. So if you just stood with the setup, and that's our basic plan right there. This has a lot on this chart because I was teaching on this chart as well. You stood with the setup. Look what happened at the open. What we do? We held the low. So if this was a high and we fell down here, we would have been going down to this low. Did we do that? No, we didn't. We held. And all they kept doing was what we do. From here, we held this low. Where we go? Boom, to the top. Came back, held low, and then what we end up doing? Right here on London's close, halfback held. This became halfback, and then the low of this time frame, right? The low of this time frame, we're above. So what are we looking for? Places to the highs. Look where we go. London's close range will keep you in the play, in the direction. So use all that to your knowledge. Look how many boxes we went up. 1, 2, 3. 3 boxes. So yeah, we even into New York and this area right here, right? London, and we tell you about time. How much time do you have? Where are we at the close? We're at the high. That's why I said there's no play after this. Because we need to pull back from these highs. Why do we need to pull back? We never swept the low. Look, we went above the low, but we never tested the low. Where we go down here, we tested the low. Where are we at right now? We had a low at the end of the day. Do you possibly sell that? I don't know. Can we wick down here and come back up? Yes, we could. Now, we're in a different range, a different day, a different range, and we're going to see what they do. If they go the opposite direction, we're definitely going 63. And 63 will put us right here at this low.
And to be opposite, I think we have to fill this box high, which is half back, this big candle. So
am I showing the right chart? I'm not even showing the right chart though.
This half back right here will show us the true color of direction.
Yeah. So if it goes up there and rejects that up there, it's not only rejecting up there. What is that dotted line like? Literally that price at 91. This price right here, guess what that is? That dotted line right there is the 4 hour high. So look how it works. Boom.
So what they just do, they just swept the high side of the candle, 4 hour candle.
So where we have to go? We swept the high, or more likely going to half.
Should come back to half back of the candle.
Half back of the candle. We failed that half back. Where are we going? The low of the candle. Where's our range at? 63. Right here. Can we come down and sweep this low? If we're down here, possibly, yeah, we could. Now the range I'm talking about is a range that is going to be shared with the higher tiers. I shared it before, like we said, we did a lot of sharing during this. I think we're going on the first month. And I throw out numbers out there that are going to hit. I think 08 was the high number, and 63 was the low number. I've done it all week long, and all those numbers have hit in the direction that we headed. Now, the fact that we're back to London's close, half back, it could go literally the other way and hit the other side. So be mindful of that. But set up. Look, the setup itself for our regular tier will keep you in a play. Don't be technical. You want to learn the whole market, we'll teach you the whole market, but you don't need it. You don't need it anymore. You need your entries. You need your targets, and that's it. Entry. Do we have entry? Where we at? We're above the low. Halfback. Rejected right there. Traded above halfback. Where we going? The high. Boom. It was literally that at the end. That's all it was. We needed to break above there. We broke above it. Boom. We got a nice play to the high side. Literally the same setup. Now, is it more technical what we do? Yes. The higher tiers are going to be the ones that are going to increase their contracts. They're going to be trading ES. That's what we want. We want people to be in ES, killing it, making at least 10 contracts, 8 to 10 contracts. That's the goal. But first, we got to take baby steps. And that's really what, you know, we're working on here to make you a better trader and to be profitable. Everybody's gonna be profitable. Whether you stay at the lower tiers and you trade just the range, or you move to the elite group, and we get you to somewhere where you've never been before. And it's very doable. It's gonna take time to break away and chisel away at whatever you've been taught and to learn this. So far it's been what, 3-4 weeks? We've been on 3 weeks, I think. Yeah, about 3 weeks.
Yeah, 3 weeks, and
everything's, there hasn't been, if there's fluff, if there's a lie, let us know. Let us know where it's at. Let us address the issues that we have, and then we'll clarify anything. But so far, let us know. So far, it's been exactly what we've been calling. And like I said, it's gonna change direction, and there'll be some people on the internet that'll be like, yeah, I took it long, yeah, I took it long. And then when it goes the other direction, they're just gonna be quiet. We're not gonna be quiet. We're not quiet about it. We're just continue doing the same thing we're doing right now. Anyway, that's it, Dobbs.
yep, that's pretty much it. Anybody got any questions after the review of the video? Y'all know to ask questions in chat, and we'll try to answer them.
And we appreciate the Paul and the other girl that commented on the Twitter feed of the Doc Dobbs's Twitter feed. If we could get more of that, that'd be very appreciated. Paul today, I think he's commenting all over the place, and that other person that's in the group as well. I'm not familiar with her at all, but they're there, man. They're quiet, but they're there. So if any, you know, we're trying to grow our room higher, which would with higher numbers, just to let this take off, you know. We'll see how that goes. All right. Set up. That's all you guys gotta know. Set up. The lead group is gonna have more setups and more detailed things. Like I said, you don't need any of that stuff. We literally, the lower tier has enough that you can literally make profit on this. If you're trading 24/7, then the lead group's for you. If you could trade that time frame, I mean that amount of time, then yeah, the lead group is for you. The other groups are perfectly okay, and we're gonna break down the groups as time comes, I guess. All right, Dobbs, I am done. The game's on.
All right, everybody get your setups done, get your charts ready, get the snapshots in, get them in homework so we can look at them and make sure that you're set up. And everybody's been doing really well. Most everybody's been doing well getting their stuff in the homework tab. But that's the only way you're going to learn it. You got to keep doing it. It's process. It's the same thing. We do the same thing every day, same time, same place. Nothing changes. We keep doing it. So,
and if you wake up and you ain't set up, don't kick yourself in the head. Don't trade until you set up. Set up, and then be like, you know what? I'm gonna play London's close. There'll be a play then.
yep.
So just wait. You know what I mean? Don't have to get into a play. Remember, you're trying to become a long-term trader where you're profitable, and then you know the rest of the stuff that we're going to offer in the room are going to be, they're going to be really good. So it's other things that we have that are going to be available, which will be like investing in bonds, investing in stocks, dividend stocks to pay out, and we're going to show you how to do all that stuff. We literally going to have literally like almost a portfolio for you set up, so you could long-term invest, and when to buy and when to sell off the same setup. So it's just a long-term version where you're going to be paid dividends. So we have other things that we're going to be offering.
All right.
And the indicators are going to be out soon as well, and the 24, the other trading thing too, right, Doc?
Yeah. The live stream alerts, it's in process right now. So we're trying to get that build out completed and tested. And once that happens, then that's just going to be something, another avenue for the ones that are struggling on entries.
Yeah. So it'll be another thing that will help you out. Um, and then you could use what we teach you to, you know, clarify, to be a little bit more keen on that play. Because the thing is, the more that you get to a higher percentage of why it's going in that direction that you could put in your head, the more confidence you're going to build into taking those plays. And the more confidence you build into taking those plays, is where you're going to add those contracts, and then you're going to add and then take profit in certain areas. You're going to know where to enter and where to start taking profit. And then, you know, the rest is just up to
Yep.
you. You know, like
It's about the plays. You know, I say it all the time. You know, it's not about the money, guys. The money is just a byproduct. If you learn the plays and get the plays down, the money's going to come. This isn't a get rich quick scheme. It's not. You've got to put in the time. You got to put in the work. It's not good. It's going to happen overnight. You're not going to see it just overnight. It literally takes the screen time and the work, and it all starts with the setup, because the setup's going to help you see it. You do the same thing every day, you're going to eventually see it. Your eye, that's like, you know, you see me drawing the low high halfbacks on the screen, and I'm doing it without even fibs. John's going to the fib, and I've already got the halfback drawn. That didn't happen overnight. That's from the thousands of hours of screen time, me watching live trading and going back and looking at charts. It didn't happen overnight. Now it's just eye memory. It's automatic. It just became automatic. I don't even think about it anymore. So you got to put in the time.
And we're going to guide you along. So, you know, the guidance is going to literally, it's going to build that confidence. Once you start seeing it and understanding why the market is going the direction it is.
Yep. And you don't need to be looking for 30, 40 point home runs. It is important for you guys to take, why do I preach the 5 points, 10 points? It's so you start getting wins. You start getting wins every day on the setups. It builds confidence. Consistency builds confidence. And you got to get consistent. So your mind starts believing. Your eye memory starts believing. Everything starts clicking into place once you start doing it. 5 to 10 points. You need to be doing it on a daily basis. Daily basis.
I'll tell you what, you get those 5 to 10 points constantly, and there's about, like I said, there's about 14 plays in a day, from Asia to New York, closed. Some days there isn't. I think on Friday there's probably like maybe 1, 2, 3, like 3 plays all day because of the reports. Now you can't take that, you know, you got to be mindful that there was a report coming out. So is there going to be more, you know, a consolidated all night? Realistically, we just went back to halfback, and then we went up to 74. After 74, it was along at London's close range. That was literally what I just said there is literally what happened. We went to halfback on a 4 hour 58. We came up from there, from London, from this report. New York took it back to the close of yesterday. It pulled back. It took off, which you don't know if it's going to take off or sell off, but you could use other things and trade it to use London's close range and buy it. I like waiting for indications of getting into plays. And then you could literally took London's close and took the highs, which that is only 3 plays. You know, 1, 2, 3, maybe 3 or 4 plays, but there's usually 14 plays in the day. And that's when it becomes like, you know, when it's good. And you're gonna see some days, you know, right now the range is only what, 60-some points with it. We had a range of 52. So 3 plays gave you 30 points, literally. If you got the sell-off from, let's see, well, you probably couldn't get that one because that was, yeah, it was kind of more upward plays than lower plays. So when it becomes very close that there's only like 4 plays, yeah, that's kind of hard. It's like 40 points only. You look at 10 points each play, 40 points. It's not that bad, but that means that between the entries, you got to do half of that. So it was only really 20 points you could get. So really two really good plays that he got there. So it was hard Friday. It was hard Friday because of the range being that small. Now, take it for granted, when we get into the 60, 70, or 80 point range, 60 to 80, that's going to give us the 14 plays. And that's just the calculation that we have out there. Once we get past 80 or so, 100 some points, you're going to see that there's going to be a lot of plays. Right now, we're just at the highs, but we're going to make our move down. And, you know, going into the Feds, what they've been doing is they've just been letting it drop 100 points instantly. It doesn't mean that there isn't going to be continuation. So we look for continuation because we know they're going to buy back up. So you're literally going to get both plays down and then up. But it's not going to be a buy at the lows instantly. We'll let you know when it starts turning around, and we'll let you know when it continues. So we're gonna guide you along. All right, Dodge, I'm done. I gotta eat some breakfast.
All right. Sounds like a wrap, guys. You know where to find us. Get your setups ready for tonight. I'm looking forward to tonight. So we'll see you in the chat.
I'll just later.
Later.